Hey there, traders. Checking in on the stock market today. We have a shift in correlation with the dollar, which is favoring asset bulls. We'll take a look at that. And we're also going to go over what aggressive or patient bulls are looking to do from here and what patient or aggressive bears are looking to do from here. Stay tuned. Hello, and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. So we'll start it off by looking at the dollar. The dollar bulls got some solid follow through from the green day yesterday, the daily trend change getting confirmed. 94 was the level we were watching. We broke it. Granted, we only broke it by 8 pennies, but this is a daily trend change. It's a higher low and higher high. The daily 12 and 26 period exponential moving averages are on the verge of crossing bullish. The last time that happened was on the big bull move that happened on the COVID drop. So I should say the COVID, where all the assets dropped in reaction to COVID. So essentially it's been 6 months since that has happened, and it is notable. So the bulls are creating space on the weekly time frame, trying their best to negate the possibility of a bear flag, and it is a win today for the dollar bulls. So first things first, I looked at gold on the 4-hour time frame and saw an equilibrium. And towards the end of today, I can see that we are still fairly weak. Gold bulls are not proving anything. They're just trading sideways and holding on. Bitcoin is very similar to this, but a little bit closer towards resistance and a little bit stronger. And the S&P 500, 4-hour confirming a trend change with a higher low and higher high. So I can say that out of those 3 assets that we just looked at, the stock market is the strongest. Bitcoin and crypto would be second, and gold and metals would be third. So the fact that we see the S&P 500 up 1% today and QQQ up 1.8% today and the dollar green is very notable. It's a sigh of relief for asset bulls because that is showing us that they can go up while the dollar is going up as well. And an analogy that I just gave on the live stream to end up the day here was, imagine it is the first sign of an early frost and we get this warning that temperatures are about to drop and get ready, cold weather is coming. So I go outside and I cover up all the plants and people are, turning on their heat for the first time and they're preparing their wood stove and fires. There's a lot of hustle and bustle, a lot of preparation and a lot of activity going on in response to that early warning and our first frost. Then over the next week, the temperature keeps dropping and rather than being 30 degrees, it's now 25 degrees. We're not going to see an increase in all the preparation activity. We already got the heads up. We got our initial reactions to it. And that's essentially how I'm viewing what the dollar is doing now. So we got the heads up in all of our assets. Hey, the dollar is seeing a bounce. A shift in momentum is taking place. We saw the significant reaction to that initial shift where everything dropped pretty notably. And now it's almost like, okay, well, those that were going to sell in reaction to that in these assets have done so. And we're not seeing a tick for tick inverse reaction to the dollar. We are seeing, if it were a tick for tick reaction, all of the assets would be at our lows of the pullback, and we're not close to seeing that happen right now. So a notable win. And if you have been watching these videos, correlations are always changing, and that frustrates newer traders a lot because they say, well, I just got my head wrapped around this and now it's changing, and I'm not even going to pay attention to that. It's not worthwhile. I have a video on our YouTube channel about correlations talking about how they're like tides or currents in the ocean. They are constantly shifting. And that's why the skill of observation is so important as traders to be recognizing these things. Just as an example today, we could see Tesla relative to QQQ was weaker. So I made a bearish trade thanks to a member pointing it out, but I entered Tesla with confidence saying, okay, well, QQQ is at the high of the day and very strong, and Tesla bulls are not doing anything with that. So I know that even the slightest consolidation on QQQ is going to lead to Tesla breaking its support. And just that observation of recognizing that QQQ was weaker, I should say that Tesla was weaker than QQQ when for the past bunch of weeks it's been stronger, notably stood out and gave me a little bit of a bearish lean where I traded Tesla probably more bearish today than bullish, and I can't remember the last time that's happened. So recognizing these little shifts in correlation are extremely important, and today is absolutely a victory for the bulls to be green in the face of dollar continued bounce strength. So NQ, 4-hour falling wedge, we're trying to break bullish here. And this is an area where, this is why I don't like trend lines to be making decisions off of. I love them for visual guides, and they certainly helped to not get overly bearish the last couple of days here in the Nasdaq, knowing that we were just breaking to lower lows and not getting followed through. But look at the current setup right now. This is how I would draw this trend line based on my style on the candles closing. And you could say, okay, we are currently over it, and this candle closes in 34 minutes. We're about to break bullish. Let's just say this candle closes right here, right now, and then overnight tonight we see consolidation, and we pull back. And tomorrow morning I wake up and NQ futures are trading down at 10,950. That would lead me to look at the little shift that I could do on this downtrend resistance line to change that setup just so briefly. Still rejecting from that resistance, still starting at the same anchor point, and now we're rejecting from the downtrend resistance line. So again, I don't like the fact that even the slightest little change in the angle of trend lines can make significant differences. But that is the case. If we pull back tomorrow and we're back within this range, if we pull back overnight into tomorrow and we're back within this range, I'm going to adjust my downtrend resistance line, and I'm going to continue to watch this tightening range play out. If we go green overnight tonight and, we get up to the mid to upper 11,200s, then it's a very clear bull break. But at this point, I'm not confident enough to say that this is a convincing bull break of this pattern. That being said, at this point, this pattern almost doesn't matter that much to me. Why? Because now it's the daily charts that matter to me. This mattered for support, seeing the bear breaks getting a lack of follow through and battling to hold this support line. But at this point, the bounce has seen significant enough follow through that I'm just watching QQQ for a daily lower high to be set. And on QQQ, I know that anything under 280.45 is a daily lower high. I also know that we are creating some good space that when this bounce does top out, wherever that happens, to be looking for a daily higher low compared to 260.11, our current bottom. So if we were to see strength overnight tonight and higher opens in the tech sector tomorrow, I'm scouting bearish for daily lower highs. If we see weakness and a lower open tomorrow, then I'm going to keep an eye on that NQ futures chart and the 4-hour falling wedge. But bigger picture, there's a ton of names, even our strongest names. And if I were just going to distinguish the tech sector right now, it's Amazon as a lead bull, Apple, Netflix, Microsoft, all lead bulls. Facebook, Google weaker. The Facebook, Google bounces are about 4%. The other names are about 6 to 8+%. So there's difference there. And the probability of the stronger names forming a daily higher low once this bounce tops out versus the weaker names, it's higher that we're going to form a higher low on these stronger names. So let's talk about a conservative or aggressive approach. Aggressive bulls are already in. They're entering in the face of weakness. They got stones of steel, and they are comfortably profitable. Patient bulls are waiting to top out on this bounce. Let's take any name. Let's take Apple. Patient bulls are saying, okay, I'm just looking for Apple to top out and give us a daily lower high compared to 118.83. And with where we currently stand, we can go another 5% up and still be in a daily lower high scenario. So if I am a patient bull, I am waiting for this move to top out. I am recognizing, okay, that's a sizable bounce. I'm interested in looking for a daily higher low. Once we lose the hourly uptrend, our daily lower high is set, and I then patiently wait, perhaps scaling in a couple positions, looking for a daily higher low, and using 103.10, that bottom, as my stop. The patient bull is doing that because they now have a support level to play off of. An aggressive bull that was entering in the face of weakness had to have those stones of steel because they didn't have a clear support level to be going off of. So patient bulls do still have an opportunity to try and enter on a daily higher low. Could we top out and then drop to a lower low? Absolutely, that's a possibility. But due to the size of the bounce, that is a less likely scenario, in my opinion, comparative to a higher low. All names will need to confirm a daily trend change if we're going to say, okay, the momentum has clearly shifted from here and our weekly higher low on names like Apple has been set. So daily trend change or bust, but we can position ourselves to try and make entries as that daily trend change is shaping up. So that's patient and aggressive bulls. Patient and aggressive bears are going to be scaling in already. If not already, then on any strength tomorrow, scaling in and using the daily lower high as a stop. A patient bear is going to wait for a loss of the hourly uptrend and use the top, whatever it is at that point, as a stop level. So let's just pull up Netflix. And Netflix again, inverse head and shoulders. A patient bull is hoping that we reject from 504.66, and then they're going to try and enter on the higher low, looking for that inverse right shoulder to form. If I want to be an aggressive bear, I am scaling into this weakness, scaling into this strength, and I am using 505 as a stop. If I want to be a patient bear, I am waiting for a loss of the hourly uptrend. As soon as that hourly uptrend is lost, I am entering bearish, and I'm putting my stop over that high wherever it is at that point. Because if I were to get stopped out, then I'm wrong. Our daily lower high has not been set. And if I don't get stopped out, then our daily lower high is set, and we then watch for the daily higher low to try and form. So, QQQ, hourly uptrend is our guide, and we're expecting a daily lower high compared to 280.45 is the more likely scenario in the short term, and then we will scout for a daily higher low compared to the pullback lows. SPY is the same thing. SPY is a bit weaker because XLV and XLF the last 2 days have been the weak link. The tech sector and our high flyers have been strong, and those other sectors have been weak. So look at SPY. For SPY, anything under 343.06 is just a daily lower high. We can go 4% more on SPY and still just be getting to that resistance level. So a daily lower high is the most likely scenario on SPY, and a loss of the hourly uptrend is the first indication that that daily lower high is being set. So again, that's what bears are watching for over the next couple days, daily lower highs to be set. We know what the dollar is doing. Bulls obviously want as much follow through as possible on the dollar, but they are keeping strong. 4-hour support established at 93.47. Anything above 93.47 keeps the bulls in control. IWM bounce attempt is weak comparatively, and that's because IWM has more weight in healthcare and financial and less weight in tech. So, daily inside bar today, if it breaks bullish tomorrow, we look for a daily lower high compared to 155.29. Financial sector broke the low of yesterday, but only by a couple pennies. So, struggling to shift momentum, but trying to form a base of support at 23.56, and bigger picture, monthly tightening range. And actually, I probably like the 2-week time frame better. So high, low, lower high, and now we're looking down at 22.49 as the most important longer term support from here. But bigger picture, once the short term momentum shifts, we are just looking for a daily lower high to form on the next bounce. The daily bounce hasn't even started on XLF as it has on our tech sector names. XLV, daily inside bar today, if it breaks bullish, we look for a daily lower high to be the result of that bounce. So we don't have any daily trend change setting up at this point for XLV or XLF. It's only the tech sector setting up for that daily trend change. So we do have to be keeping an eye on these sectors as well as far as the broader market is concerned. For me personally, the tickers that I day trade are more correlated to QQQ. And so I care more about QQQ. And that's looking at Tesla and some of these other high flyers. OSTK, I've traded a bunch in the last couple months. So I care more about QQQ. But as far as a glimpse of the broader market, we definitely still have a lot of proving to do. You know, we need to see XLV bounce enough to create the space for the daily higher low. We need the daily trend change, and we haven't even started a bounce yet at this point. So my viewpoint of the individual tech names is different than my viewpoint of SPY as a whole. Biotech sector still pulling back, solid bounce off of that low of today. Hourly time frame has not changed the hourly trend. So we know next time we consolidate, we're looking for an hourly higher low compared to the low of today. And that's a potential opportunity for patient bulls. Again, aggressive bulls are entering in the face of weakness in hourly oversold conditions. Patient bulls are seeing a bounce saying, okay, that's proving it to me. I'm going to enter on a higher low and use 109.40 as a stop, which is why when people ask me about trade setups, the first question I ask is, are you patient or are you aggressive? And that's going to determine how you approach the trade. SMH, daily bounce underway. We have a resistance level at 172.18. The more important resistance level for me is 174.74. And the double bottom at 163.57 is a very clear support level to be watching. We're right in the middle of that range, so not a whole lot of clarity here. But what I can say is that this sector is stronger than XLV and XLF over the past couple days, and perhaps in line with the tech sector, which has been the case all of 2020. There's shifts every now and again, but certainly those sectors pair together better than anyone else with SMH. So the VIX has 4 days in a row with a lack of any strong closes. We're closing near the low of the day 4 days in a row. We're looking down at 25.30 and 24.80. And essentially, it is just a lack of fear. I'm seeing a lack of fear today in the broader market, and curious to see if that can continue even if the dollar keeps going up. Because then the bulls say, well, you know, if the tech sector names, if we're going to just go up in the face of dollar weakness, in the face of other sector, I should say in the face of dollar strength, in the face of other sectors being weak, what's it going to take to derail those bulls? And the answer is I don't know. But again, today is a day to give confidence to some of these tech sector names. Amazon had a very timely upgrade to give it a huge bounce at this point over the last 2 days. But overall, the VIX here potentially already setting a weekly lower high on this move. All about 24.80. And if 24.80 breaks, we then confirm a weekly downtrend again. Gold 4 hour is sideways, but still fairly weak overall. Daily inside bar. If the inside bar breaks bearish, then we don't have confidence in a bottom to the dump being set yet. And if it breaks bullish, we look for a daily lower high compared to 1974. Silver's the same thing, but even weaker than gold. Silver 4 hour time frame, clear downtrend, lower high. Anything under 25.24, just another lower high. Tightening 4 hour range, daily inside bar, but metals are the weakest of the assets that I am watching in relation to the dollar. Miners, daily inside bar, held the low of yesterday. Base of support on this daily chart is still holding, but the bulls really want a green day tomorrow to start this daily bounce and get a bit more comfortably off of these support levels to not stay at risk of falling through them. Oil. Daily inside bar. If it breaks bullish, our daily higher low is very quickly set at 38.87, and that would favor the bulls on this broader pattern for me. Because it would be just 1 day of pullback and then a quick higher low already being set. If the inside bar breaks bearish, then we haven't set that daily higher low yet, and we'll still be looking for one, but it's the inventory report tomorrow that's likely going to dictate the direction that this inside bar breaks. Natural gas. Natural gas still weak, trying to build a base of support at 178 on the 4 hour time frame. Keep in mind, if you're watching UNG, it's going to be different. UNG is looking at futures natural gas prices and also has a lot of holdings in US dollars. If you look at the breakdown of holdings in UNG, they have a decent cash position, and the dollar going up, DXY going up, only helps that position, but it's a very different look than the spot price of natural gas. So the bulls on UNG are attempting a daily higher low, and if the bulls from here could break 12.28, our weekly higher low will be set. So just be aware that what you're trading determines what you're going to be paying more attention to, but it's a little bit different of a setup based on whether you're looking at spot price or futures prices. So overall, again, the overnight session always determines what I'm going to be looking for as a day trader the coming day. If we see a bull move overnight and a gap up open, I'm scouting for pullback in the tech sector names and for daily lower highs. If we see a lower open, I'm going to be watching for the potential of daily consolidation to begin, to be watching for some of these bulls to try and find daily higher lows. And right now where we stand, a little bit lower than where we closed. So we'll see if this 4 hour falling wedge on the NQ futures is still in play. And again, if the bears control the overnight session and consolidate from the highs of today, then yes, that NQ falling wedge will still be in play. Hope you have a good rest of your day. Do good things, like, subscribe, comment, share, party, do fun stuff. Got a couple new flowers Some fall bloomers, the yellows and the whites. And still some new purples. Starting to get chilly at night, dropping down to the upper 40s. But the greenhouse plants are coming up. We got lettuce, kale, collards. Forget what else, we'll see. I realize the reason why this fig is so much bigger than the ones in front of the house and these other ones, it didn't put out any fruit this fall, and all the other ones are putting out fruit. So that's a good example of showing when different plants focus their energy on different things, they get very different results. That's why for a lot of crops and things, you clip off early flowers. Tomatoes, you don't let them flower too early, so they focus on building their root system and their size, and then their energy focuses on the flower when it's ready for fruit.